Alright, hello guys, glad to have you on board again today. You know what time it is, same old story. Let's jump in without further ado. Though the thing is, we've passed the S4MC meeting and lots of things. We had the PC core numbers last week. So we're starting to see the flow trading timeframes kind of shifting toward the direction that we've expected all along, which is, well, despite the catalysts and all the noise and the people talking endlessly, it always feels more probable for prices to follow the low risk strategies direction, which for us has been defined to be bullish. So I've always mentioned all of these kind of fundamental noise could be interesting at some point. I mean, the market somehow does follow these fundamentals, but the thing is that, well, they generally tend to confirm what the prices have done anyway before that. So it's really the way it is to me. Flow trading always has a bias, and this bias isn't the fundamentals or whatever shit that is, but most importantly, the asymmetric there is between going up or going down depending on whichever the lowest strategy tells you. The lowest strategy, I've always said there are likelier chances to go up rather than down, and despite all the shittiest news flows and that might be on the medias and the like, well, odds were not 50-50. Of course, there were reasons to be bear. It's not 100% versus 0% chances, but it's not 50-50 either. And even though we've had hell of a shitstorm of negative news lately, the prices of the low-risk strategy always suggested more upside potential. That's what I've always said. And then, of course, once you figured out the low-risk strategies, the thing is that you go into those lower time frames, aka in here you go 3 steps below on the time scales you have, and basically that gives you the area in which flow trading has the likelier chance to follow some structure, which means, remember, flow trading is nothing more than volatility arbitrage on lower time frames. That's generally something that is going to be hard to predict, which means don't try to have too strict rules in these things. It's most likely the market makers arbitraging volatility by using some of traders' most known biases, the fear of uncertainty and the impatience biases, which is basically the market maker is going to play around time. It's going to make things move fast and then slow and then fast and then slow, and it's going to play around this to trigger some emotional trading activity. On the other hand, the second things they can use is uncertainty biases, which means the brokers are generally using this, and that's the reason why I generally tend to call that the maximum uncertainty, which means the broker, as it is playing on your fear of uncertainty and impatience biases, will generally try to play prices that way, with fast impulses and then nothing, so that you get to doubt at all times. Okay, you're going to fear of missing out because, well, sometimes the prices just go surge and you're going to, oh, I got to buy because I'm missing out. They're playing with your impatience biases. On the second hand, they generally tend to maximize uncertainty so that you get to trade for fear of uncertainty. And this is what generally happens. So if you get to trade flow trading timeframes, you've got to be very strongly facing those biases, and you're gonna have to be strong not to fall for them. All right, so remember that you can't control flow trading. You're gonna have to follow the guidelines by following a simple set of rules. The simple set of rules simply can't predict the future. They just help you navigate those flow trades the most efficient possible way. The end game in here has always been the same, and that's the reason why I'm getting this long intro, to just remind you what we do in those low trading. We're certainly not trying to make 100% winning trades. The thing is that all I can tell you for sure is that if you do follow those rules and you apply them hundreds of times in hundreds of different assets in different time frames and stuff like that, as long as you follow the rules, identifying the low risk strategy time frame, going 3 time frames below and trying to trade more specifically in the direction of the low risk strategy suggestion. Well, you can go both ways. You can still trade the bear flows, but there's still a highly recommended occurrence to try trading those in the right side, because there's supposed to be 3 of them against 2 of them in the opposite direction. All right, though that's one thing. Okay, once you follow these very clear set of rules, and it's definitely not complicated. We've replicated this What I'm saying it here is something that has been said before, something said last week, something said the week before that, and the week before that, and so on. So you would see those rules are pretty damn simple, right? It's just wait for the first flow to occur, wait for a third range boundary, buy the moving average or the volatility boundary, gets to trade the second flow once the previous market top is broken. You trade it right up until the third range boundary is plotted again, which is the sign that you should start locking in some gains, and let the market consolidate to the lower Bollinger Band. When you get into the lower Bollinger Band, buy again for the third and final flow. When you've got to a full sequence of 3 flows, you stop it there and you let the bears consolidate 2 times around. Of course, this can be reversed. For bear flows, you're going to have 2 bullish flow consolidating, okay? Once the 2 flows are consolidated termination, basically you wait for another set of 3 waves to start again. First flow has to be settled in, and so on. So now that you've got those rules, what the hell is going on? We've mentioned that last week, so we were expecting that, because that's the side of the low-risk strategy. And remember those asymmetries. The thing is that there are still likelier chances for prices to go up rather than down, despite the shittiest news flow around there, just because I don't know the future, but the low-risk strategy tend to say it's not 50-50, there are more chances to go up, all right? So the thing is that we've had the confirmations that we were looking for, as now context have been crossing over the moving average that is slightly rising. So that's the sign that in H1 time frame, we are settling in for the first bullish flow. That means right now we need to wait for a third range boundary. Of course, we'll let it go up as long as it wants to go up. Don't fight against it. Wait for a third range boundary, and then we'll be mature enough to buy either the moving average or the lower Bollinger Band, all right? Remember, that's the way it is. For the second flow, you can buy either the rising moving average or the lower Bollinger Band. That's the way it is, all right? After and only after the market has plotted a third range boundary, all right? So right now, well, what I'm doing is I figured out what I wanted. The bulls have struck quite some nice moves to the upside, sufficient enough for the for the context to rise above the moving average, which is the sign that we have a confirmation that the first bullish flow have occurred, all right? And until then, I'm going to let it be that way, all right? That's the sign to me that I'm going to have a green flag, a green light to start trading if the market kind of draws down. I'm going to wait for a third range boundary anyway, and once this one is plotted, I'm going to start buying, all right? That's the way it is. We've anticipated that last week, because these sets of rules that I use are always the same, all right? That's really the way it is. Okay, so now we have a first glimpse of the answer. The market wants to go apparently more bullish than bearish. The thing is that, well, remember that we are still in the possibility in which this could be just the first of the 2 consecutive flow, and therefore we still have 1 to go. The uncertainty is around this area, and we had hell a lot of signals suggesting the market will be noisy into this area and that signals will be tricky. Though, remember what we stated, the rules are simple, but once you can figure it out clearly, because there's noise and uncertainty, instead of aggressively trying to remove that uncertainty, just embrace it. Remember, that's the really #1 factor. If the market makers wants to blur the line as much as it possibly can, don't try to read between the lines. Just try to make it easy on you guys and say, I don't know, so I'm going to take the 2 hypotheses of it can go up or it can go down, but I will always favor the direction of the lower strategy. So if you sell, try to sell with lower position sizing than when you buy. All right, and try to have at all times a slightly higher bullish exposition, all right? Kind of a remaining slope in the background, still following the lower strategy, all right? But still, what have I done personally on my personal flow trading strategy? I've done exactly that. I still had a remaining bullish position no matter what, always following the lower strategy directions. But now that we've gone settling in for a first context, what do you think have I done yesterday with those signals? Well, of course, I took some profits. That's the way it is. Now there is still the remaining pending uncertainty in which there could be a second consolidated flow, which would have to break this one down and so on, okay? The bulls have managed to settle 1 point. That doesn't mean the bears will not fight against, all right? So as there is uncertainty, I've gone trading above the higher time frames context and so on. This feels to me like an appropriate area to start looking in some nice gains. I've taken some risks and I want to score the gains for this. I'm certainly not getting the hell out. I am still having a net bullish exposition to this market because, of course, there could be reasons for it to go higher. But remember what I said in the introduction. I mentioned that thing that the broker generally tends to play with two factors, all right? So in here, we're diving down the rabbit hole. So these are not rules. These are more like sentiment that I'm trying to share with you guys. And you will get familiar with this over time. As more and more experience with those flow trading strategies, you get to learn how the market makers actually try to make its money by, like I said earlier, maximizing uncertainty and playing around with time by accelerating and then slowing down stuff so that it gets to trigger your biases to trade. All right? So remember that. Normally, the market will always go for the path that maximizes uncertainty. And in that perspective, well, when we're in that area, there are two options. Either prices will break the previous high, which is going to open the door to say, well, the bears really take a hard hit there. Or if there is still the opportunity for the bears to settle down for another score to the downside and a potential second flow, well, this area is the maximum area of uncertainty, which says if the market maker lets the prices go up, the bears are fucked. If the market makers sends the price right back down very aggressively with things like that, straight line down, well, the bulls will fail to support the rising moving average and they will have only one remaining choice, the Bollinger Band. And if prices get all across through this, well, the bears will have reasons. It will take over on the bulls. So that's really the way it is. This area is critical to me because inching just a bit higher is going to remove some uncertainty in the market. It's going to give us the answer. The bulls have won. And remember what I said previously, market makers generally tend to maximize uncertainty. So my guess is in that area, the market maker will likely try to play the second coin it has in its pocket. If it cannot maximize uncertainty in this area because we're close enough to giving an answer, well, they generally tend to play with time. So my hunch is in here that the market makers will likely play around time, which means, well, it gives me two reasons. That means I don't really think the market maker is going to remove uncertainty by breaking the resistance. I think this is less likely to happen. Doesn't mean it won't. Like I said, I'm not too aggressive against the market maker. But I know, well, there are three choices. Prices can either stay there, go higher, or go lower. I think they could go lower, but not too quickly. I think they can hardly go higher, which leaves me with two options. Either prices stay the way they are and the broker just kills volatility before opening again, or the market go on a V-shaped reverse to send a nasty message of reversal. I don't have the answer, but all I would say is, as a bull, as I see very limited chances to go higher and more chances to either stay there or go lower, I lock on some partial gains. I have taken profit patterns on the 4-hour chart, all suggesting, yes, this could be appropriate to take some nice gains and wait for this to happen, okay? The smarter choice is always to wait for the third range boundary to do so, all right? So in here, I'm anticipating this area, but of course, don't ever limit the gains, which means whatever taking profit I've done in here is very limited and I still have bullish exposition, all right? I want to make it very clear. But the message this week in terms of updates is exactly what we've planned last week. No new stuff for you here. The bulls have succeeded settling the first bullish flow. I am now waiting for a third range boundary and I will buy the following moving average or lower Bollinger Bands in these markets. All right? Next in line, we have studied USD WTI. Oh, sorry, I got alarms all across the board. Let's go get the kid. So, all right, that's the thing, okay? USD WTI, another big impactful stuff. We've mentioned that one in the weekly briefing. There's been a hell of a gap due to the OPEC supply reduction intervention. And the thing is that on those timeframes as well, remember what we were doing? We were trading possibly what is monthly regular timeframes. So we were paying attention to 4-hour chart in potential early triggers for potential forthcoming flow structures. Well, we've reached out the low risk strategy area. It's triggered some kind of a reverse. Remember what we were stating back then, there were still probabilities for us to stay there in a long time, but now that we've got that bullish gap and a supply reduction, that's the kind of catalyst that could trigger the first flow all by itself. So right now, my uncertainty remains on, it's still far from being enough to settle the score and say the bulls have settled the first trading flow because same old set of rules. What the heck do I think of? I'm not going to overthink things until the bulls have first reversed the context. So we need to close this context box and reverse it. Well, my hunch is it's very likely going to be the case. So don't be stupid enough to fight against this market now. I don't think there's any rational reason to sell, but just to let it be, wait for the candle close, and then see how it goes. If the context is reversed, that's the first of many things that have to come afterwards. The bulls have to maintain the pressure to the upside, keep prices above the moving average until the support context passes across the moving average, all right? Once we get that, we'll have the same story as we've seen before in the S&P and all of the different assets classes. When you're in the right flow trading, you want to see the bulls maintaining price pressure long enough for the first flow to trigger. Then, same old story, wait for a third range boundary and buy the moving average or the rising Bollinger Band. That's really, really the way it is. It isn't so complicated. And I hope you get that by now. These sets of rules are very fucking simple. And you have to remain and retain these rules as being as simple as they are, just applying them consistently over time. All right? That's really the way it is. It isn't a set dependent or time frame dependent. That's really a set of rules that works very efficiently on every fucking asset and every time frame you have to do it on. It just requires to do a low risk strategy analysis first, and then scroll down to the lower time frames, apply the rules, repeat, rinse and repeat over and over again. And this is clearly a winning strategy. It doesn't and never will guarantee the next outcome for the next trade or the next couple of trade or the next 5 trade, but out of 100 fucking trades following these same rules, you just can't lose money. Okay, that's really the way it is. All right, last but not least, we've gone for gold and silver as we've updated them recently. Same story in here. The actual flow trading are happening in the daily chart, and we've stated that we kind of nicely recovered the first area in which bulls could have bought back then. Give it a second to plot. Come on. Come on. Trading view, guys. I pay for this. Get it to work. All right, anyway, you know the drill. This is the same chart as it was last week. We've got the long-term bottom in here. The first flow has been triggered on the daily chart. There's been a hell of a consolidation. Third range boundary has got in here. Some would say in here, okay. The thing is that still, well, all of those areas were areas to buy, all right? All of those support areas when the prices try to trade at the moving at the Bollinger Band. And then we get over by retesting the first horizontal level, nice V shape. It's now confirmed because we've broken the resistance immediately, like it's really down, up, and breaking the previous resistance. Now the Bollinger Bands are getting ready to open up, and once again, it feels to me like there are more upside potential to come in silver. Same old story, we need to break the third range boundary as a next bullish signal and then break the previous high point at the $30 mark to confirm that the second flow has triggered itself. For now, it all looks like that. So there are no reasons to rush to the exit door because, well, you've got too much gains and you fear of losing them. Well, just be smart enough to understand. If you fear of that, remember the same old story, when you get to trade flow trades, you're always going to have to embrace fear of uncertainty and impatience biases. If you ever fall for this, you're going to go to the natural new biases, which means you're going to take the gains too quickly and you're going to let the losses run away forever. Though don't ever do fucking that. It doesn't take too much rules to get to navigate the flow trades, all right? It absolutely requires you to be able to absolutely well figure out the low risk strategy first. Okay, those who just try to trade volatility randomly on whichever time frame you feel like this is the appropriate one, Jesus fuck, it doesn't work. Okay, so figure out the right time frame, have a clear and simple set of rules to navigate flows, and don't ever, never, ever fall for uncertainty or impatience biases. Like if prices move quickly and you feel like you've missed the shot, don't ever buy out of nowhere. This is the market maker making you the impression that you have to act now, and that's the worst thing to ever do. All right. On the opposite hand, that's the same old story. If for whatever reason you get into an area in which you're supposed to trade, and for whatever reason the shittiest fucking news flow is ever happening elsewhere, which maximizes your uncertainty, well, maybe I shouldn't buy because the news is very bad, and you feel, okay, don't ever fucking care about fundamentals when you flow trade, all right? Just focus on your rules, apply, rinse, repeat, and do it over again. That's more than enough repeat for today. So here it goes. I mean, to me, all the flows are going according to the plans. So that's well, I'm making money. I'm just gathering the rewards for the risks that I took. That doesn't guarantee everything will be fine like that in every one of your trades. But these ones that I've been trading with you are just delivering on the gains. And that's just the way to me it is. I'm doing my job. I'm getting rewarded for this. And I hope you will get to learn these strategies and be efficient with them over time as well. Until then, no secrecy if everything has been explained before, and that's always like that, all right? You know what you're going to do next because you have a set of rules that tells you how to do it, how to read those markets, how to navigate this volatility and uncertainty and impatience biases. And that's the way it is. And don't ever fall for the narrative that, well, it worked 3 times in a row, so the next time around I'm going to triple the position sizing to make more money. No, it isn't, all right? Remember that. You have to apply the same old rules with the same old type of money management out of 100 trades, and this is what guarantees a possible positive outcome on your account flows, all right? Some trades will be won, some will be lost. Don't ever get personal with any trade. Don't follow the news flow. Don't let yourself fall for the narratives. Just fucking apply rules, rinse, repeat. Flow trading is boring and repetitive as hell, and it has to be that way. All right? That was once again a necessary reminder, I guess. That being said, see you guys next week.